Good morning and welcome to Stock Analysis Friday on this July 26, 2024. Great to have everybody here. Markets overall are up over 500 points, around 575, and that goes across the board. Nasdaq's doing great, S&P up as well. So we're going to take a look at all the markets. We're going to take a look at Bitcoin, and then, of course, any stocks that you want me to look up. So go ahead and type those stocks in the comments area now and type them in caps. And let's do two at a time. We want to be together for a good half an hour today, but at the end of the half an hour, we're going to cut it. So let's do two stocks per person, and let's go ahead and get going. So I'm going to go full screen here. All right, first thing I got to go over are the risks involved in trading. Like I always say, without that risk, there is no opportunity. So the two really go hand in hand. You need to be aware of the risks and plan for it. There's several different types of risks in the markets. Basically, there's market risk and there's trade risk. We as traders can control the trade risk. The market risk is really a factor of things that we cannot control. Certain events, wars, economic problems, news events, and things of that nature that come out of left field and cause markets to gap and could gap very, very strongly against our carefully chosen stop, and therefore our losses can be more than we anticipate. The only way to protect yourself against market risk, of course, is fund your trading account with money you can afford to risk. And then when we actually go and take a trade, then we calculate our trade risk, and we do that through software that we have called the risk to reward calculator and the trade size calculator. Also, too, please run anything we talk about today. If I find a stock that I really like today and we all kind of think it's a good one, run it by your financial advisor and make sure it's suitable for you. I don't know your personal situation. They, of course, do. And there's no guarantees in trading the market. So everything is in a realm of probabilities. A couple books I've got available on risk control that really is something everybody should do is have a good risk control program in their approach. And I've got two books that address that. My new book, The Art of Trading, second edition, is coming out this year. In fact, we're finished with it. It's going to be a pretty large-sized book. So it's basically a brain dump of my information that I've learned in trading the markets over the last 30 years. All right, Elliott Wave Techniques is another form of technical analysis, and I put a book out on that, published by McGraw-Hill, and so you may want to check that out as well. All right, we have a variety of different software tools. When I show you charts, I'm just going to go over very briefly what you're looking at. But if you want to learn more about that, I'll put a link at the bottom of the recording when we get that posted today. And you can check out the software on your own. We got tons of videos on it. But you definitely, one of the things that we really made a point of covering when we developed tools like this was we tried to really factor in the major aspects of trading the market. And yes, entries and exits are important, and that is why we have software tools called the ART, AL, PTF, TLM, and ERI at the top. But then if you're trading something like the stock market where you have thousands and thousands of stocks, you have to have a way to sort them out and find really those needles in the haystack, right? And so that's where the scanners come in, okay? So we have scanners on the second row. And then finally, what I think is extremely important is the risk control aspect of trading the markets. And we have our risk control software at the bottom. Now, in terms of trading the markets, if you are a day trader and you're trading the futures market and you're kind of just starting out learning, or you want to kind of get involved and have a little bit of skin in the game, so to speak, one of the great ways to do that is through a prop trading firm. And these prop trading firms basically give you an evaluation account, which is nothing more than a simulated account. And you pay a subscription fee for that each and every month. And it varies depending on what account size you choose. And you can choose, from a $25,000 prop account all the way up to a $300,000 prop account at the Apex system. And I recommend the Apex Trader Funding. They've been around the longest. All my prop accounts are with them. But you also get free data for the futures market for that. So you get intraday free data. It's specifically designed for day traders. But what a great way to get involved in honing your skills. And then once you've got a system down that gives you an edge and you're able to trade it successfully, you can then actually become funded. And then you get to keep like 90% of your profits. So not a bad deal. And it does force you to actually work hard and roll up your sleeves and get a system here that gives you an edge. But we highly recommend it. And, we have a day trading room where we work on scalping techniques to do it, because you have to work within their realm of requirements to get funded. And so we can help you with that. And I'll put a link to the day trading room if that interests you. But I'm also going to put up also a link in the recording, as well as what I just posted in the comments area of a discount code. So if you use that code, you'll get a break on the subscription fee. All right, let's see what else here. Okay, give us a like, okay, if you haven't already. We appreciate that. And I just want to quickly, before I jump into live markets, these are, we update charts every week on the overall market to make sure, obviously, we're trading in the direction of the overall trend. And we do this for all the indexes, but I'm going to share with you the Dow Jones today. If you're interested in looking at all the markets, we have a service called the More Report or subscription. And that's a weekly service where I do a video every Sunday, as well as give you the charts on all the major indexes. So in this case here, you can certainly see on the Dow Jones daily chart, we are still in an uptrend. And I know a lot of folks on YouTube were predicting the market hitting some type of disaster this summer and selling off. We didn't see it that way. And certainly the realities of the market never, ever, indicated that it was selling off at this point. Is it going to do that in the future? Sure, it certainly could. But we'll be ready when it does. But in the meantime, enjoy the trend up. That's why most of the stocks we've picked here have all been long trades, because the trend is still in our favor. Now, a couple of things I'll point out here on this chart is that notice that we have something called the Wave 5 target zone up here. So that Wave 5 target zone has been reached. However, there's some indicators we use at the bottom called the PTF, which is an indicator we designed that has a 75% probability of accuracy, and it's indicating more highs are coming. So we're not done yet going into that target zone. And we certainly have put up a trend line here for you to see here, and you can certainly see the trend line has not been broken. And then we have some support levels here that we'll keep an eye on if the market deteriorates and starts to sell off. So by looking at the market in this type of situation, it's pretty hard to miss a downtrend when it happens. But for right now, enjoy the uptrend, because it's not quite over yet. And you can certainly see that because the market's up over 500 points right now. So it's done pretty well. All right, so let me come out of here. All right, and let's go to the live charts here. And I want to start out by looking at Bitcoin for a moment here. Bitcoin is a crypto, one of the most popular ones. And we're bullish on Bitcoin. We think the target's going to be 86,000, almost 87,000 to 107,000 on the next run up, which will be an Elliott Wave 5. So we do anticipate that being around the corner for Bitcoin. So we're kind of just want to make sure that we are done with this type of situation where we've gone through a correction on it. So once we're done with that, then we think we're going to go up, and I think we may be done with the correction. We hit a target down here. It bounced off. We have a lot of green over here and now green back over here. So I kind of think we're in a pretty good situation with Bitcoin now for it to start to move to the upside. Now, one of the things I like to look at, I'm going to enlarge this a little bit here, is I like to look at stocks on 3 different time frames, and Bitcoin's no different. So I've got the 60-minute chart on the left, the daily chart in the center, and the weekly chart on the far right. I'm using NinjaTrader with all our software installed on it. I have scanners up here, but we're not going to use those. But in any case, right now it looks like we've had a little bit of a pullback. I'd like it to break this current high, and then I think probably that's a good indication that we're on our way. So not a bad buy point coming up here. I think we're pretty close. I think it should go on a watch list for everybody. if they're thinking about going into it for the first time. If you've been in it, you've had some great places to add on, like down here where it pulled back. But I'm pretty confident that we're going to eventually make new highs and do it by the end of the year. All right, I don't think that this is something you're going to have to wait years for, like before. I think this is going to happen pretty quickly, and that's kind of where we're at. So Bitcoin, I'm bullish on. I'd like to see it break this high before formally recommending it, but I'll put it on the watch list because if it does what I think it's going to do, it's probably going to break it before we meet again, and we'll be putting that on the watch list next week. All right, so let's see what else is cooking out there. All right, hello, Jim. Okay, Stuart, hello. All right, let's see who's first here. We've got Stu here with PFE, Pfizer. All right, so we looked at Pfizer last week as well. So let's see what we got cooking on that for this week. And let me just adjust this chart on the left for a second. Okay. So we're moving off the bottom. I think it's a really excellent buy still. Okay, I think we probably liked it last week as well. The only thing that would have kept us out if that short-term time frame was a little iffy. But yeah, this is looking pretty good at this particular point. I would say what we could plan on for some type of target here. Let's draw in just a retracement target, and as you can see, we're looking at a fairly decent risk to reward up to that target zone. And we even could go further if the total correction is over, which I think it probably will be. So our first target is 36.60 to 43.74. I would not get out there. I would maybe tighten stops up a little bit, but I would anticipate going through that Fibonacci target zone and see some more acceleration to the upside. So I'm going to put Pfizer down as a buy. All right, what I'd like you to do is put your stop at the bottom of this pyramid here on the daily chart. And we're talking about a low here of 27.07, so 27.06. Give it a tick under that. Prices are currently at 30.60, and we've got basically a 2-to-1 risk to reward. Your risk is 3 points. Your target has at least 6, so that's a go, okay? And that stop being far enough back should allow for any volatility or quote-unquote noise in the market, but I'm liking that a lot, okay? Excellent. All right, BMY. Okay, so BMY, another excellent break from the bottom, okay, literally within the last week, right, guys? Check that out. All right, so we've got a nice move off the bottom. We've got no more short positions active on this. So everything is now neutralized and now placed to the upside. So bullishness has come in. What's interesting about this is we still have a little bit of a red owl on the weekly chart on the far right. So you have to be a little bit concerned because you haven't had a super big pullback on that weekly chart. So you got to have your stop pretty low here. And I would put it at this pyramid here if you wanted to go in now. Now, a couple things here. We've also had a gap on the 60-minute. Gaps usually get filled. So I think this is, if you want to take an early entry, it's there, okay, without a doubt. If you want to wait a little while for the pullback, you certainly could do that. But I'm going to go ahead and initiate this as a buy. Let's just see what we've got cooking here. This is an ABC for, all right, so the best we can do here is a retracement trade. So let's see if there's enough profit in that at this point. So we're looking at 55.86. We're roughly at 49. So you're talking, what, 6.5 points there. And our stop needs to go 39. So that's 10. No. All right. So the risk to reward's not there. Okay. Even though I do like it. All right. Not a bad one. It's just too late to get in. Now, if this pulls back, all right, I would definitely take a look at it. So let's put BMY on the watch list as well and wait for the pullback, okay? All right, Stuart, good job. Thank you. Both are excellent. It's just a matter of risk to reward. Okay, so let's see what else we got cooking here. Jim, how are you? SOX, SOXS. All right, so we're coming off a bottom here. Boy, what a long downtrend. Look at that. Okay, so what do you do with this? Well, it's starting to move up. There's no question about it. We've got a green PTF on the 60. We have not had enough of a pullback in my eyes to warrant enough of a pullback to make sure the trend is up now. I'd like a bigger pullback. I'd like a pyramid in here if we could get it too. That's kind of what I would like for BMY as well. So I think let's look at this next week. Okay, I think it's a little too soon, and I do think there's a possibility that the bottom is in, but I want a good pullback first before we can pretty much verify that. We had a little pullback here, and I like that, but that wasn't enough. So I think let's wait and see what we have in store later. I think you'll get it, okay? All right, let's take a look at another one here, SQQQ, another inverse here. All right, so what's interesting about this is the inverses, yes, they pull up during the market when they come down a little bit. But in a case like this, notice you got a red PTF on the daily. So you got a little bit more movement on the 60-minute to the upside, which is kind of interesting since we've had a pretty good day today for the most part. So in a case like this here, I would not go long on this at this point, not with a red PTF, but I'd keep watching it, okay? All right, back to you, Stu. All right, PHES. Okay, so we looked at this one before a few weeks ago or last week maybe, and it looks like we've got a situation here where we may have had a correction here that ended, and then we had a move off that bottom. I don't see at this point, I'd like it to get above this high over here on the weekly chart and break that consolidation one more time before taking a long-term position in that. We're getting the setup here, but here's what I'm talking about. I'd like to see this break this high here, okay, over on the weekly chart. In terms of a shorter term trade, you've got a trade set up on the 60-minute chart, and there's nothing wrong with trading the 60-minute chart, but let's see where that possible target could be. And you're looking at probably $14.21 to $15.13. And you're at 13.27. So I don't really think it's worth it. But I can tell you what I think is going to happen. I think when you get to this target up here, all right, once you're there, that'll be a fifth on this time frame. And that will probably be the end of this first big move. And then you'll get a more significant pullback. So I would wait for the pullback and then let's take a look at it again, okay? That's kind of what I think you should do on that. Let's take a look at silver. Okay, silver is another one I wanted to take a quick look at here, and then I'll go to your next one there, Stuart. But silver too is pulled back. I don't think it's quite done pulling back yet, but after this pullback, it should resurge back to the upside. So let's give that another week and take a look at it, okay? All right, LNG. All right, and Stuart owns both of these. Okay, so hopefully you've owned them for a long time. All right, so we've got an extended wave up on the weekly chart. We're starting to see bearish divergence. So we're kind of getting to the mature part of this trend. We could have one more leg up for one more possible high because we have a green PTF on the daily and we have an Elliott wave configuration that would make sense with that on the 60 minutes. So that would be a 3, 4, 5 with new highs. And that would satisfy the green PTF over here. I'm not convinced we're necessarily done with the correction, We could have an ABC here, so we could be done, but we did not reach the high probability retracement zone. So every time that happens, that's kind of a little head scratcher, because you do have a little bit of a pyramid here, okay, and you could have a possible bottom. The ABC makes sense for a possible bottom, but again, you did not reach the high probability target zone, and you still have a red owl. So at the very least, I would hold off on this. If you're long on it, there's nothing you need to do. All right, stay long. However, on the next high, then you might want to trail those stops up even closer, okay? So keep that in mind. All right, Frank, how are you? Okay. Ooh, Frank, good. BTI specifically long at 32.02. All right, so we're at 35. Well, good job on that one. I see no reason to get out. You've got green PTFs across the board, and so stay with it. I would put your stop, I'd give it some room. Put your stop no closer than this pyramid here, which has a low of 31.91. So put your stop at 31.91, okay? Right there. So that's where your stop should go. And I'd stay with it. Now, it doesn't mean it can't pull back, but with green PTFs across the board, short term, it should continue to go on up. You do have a gap there. Eventually, it may fill that gap, but for right now, I think more highs are coming before it does that. All right. I think you have the software. I'm not sure, but if you have the software, then that will aid you in exactly what to do this upcoming week. Okay. All right. Let's take a look at GDRX. Okay, GDRX long at 7.42, so you're doing well on both these. So our target on this one is around $20.79 and $31, and we're getting that by looking at the area on the far right. You're going to have a pullback at some point, and you've got a lot of pyramids here. So you may want to, I don't know how many positions you have on this, but you may want to take a little off the table on the pullback, or let the whole thing ride to the target. Okay, I'll leave that up to you. Everybody would manage that a little differently, but being long is okay here. All right, but notice the PTFs did go yellow, so you've had some scale out opportunities. All right, BFH. Okay, so BFH here again, long at 42. Excellent job. So you've already touched the target zone we were looking at for here. Now it could still go through that, but we have yellow PTFs now. We've got bearish diversions on the 60. I'd put my stop at this pyramid here, all right, which has a low of 49.42. So one tick under that. That'll lock in your profit at this point. And if new ones form, you can trail that straight up. Now, we just turned to a yellow PTF. So if you wanted to like scale out of a 30-year position, you could do that. We still have a green PTF on the long term. So you kind of don't want to scale out too much. But if you wanted to lock in a little bit, you could do that, or just keep your stop at the pyramid there. Okay, I'll leave that up to how you want to manage it. Either way is A-okay, but it basically it depends on how you want to handle the profits. Now, also too, green PTF on the weekly, if you wanted to keep the rest, if you scaled out here and want to keep the rest of your stop further down under here, you could do that as well. Let me just see what this pyramid here in the weekly is. That's 38.41. So that's a little bit lower, obviously, than the pyramid on the daily chart. So you could keep a stop at 38.41. Okay, that could be possibility if you scale out some now. All right. Okay, let's take a look at UNG here. Now, UNG is the ETF for natural gas, which made a brand new low recently. So we're kind of once again now waiting for natural gas to bottom out here. All right, it has not yet done so. Do not take any long positions on it yet. Let's wait for a turnaround. We've got some green PTFs still visible, but it's still in a downtrend. The pyramids are all red. We're bouncing along the bottom. Be interesting to see if we break below that low, or if it holds and we get a rebound, but any long positions would have been exited because it went below the bottom previous. And so at this particular point, you're kind of in a wait and see kind of format. So I would keep this on the watch list for sure. Everybody should probably have that on their watch list. So that's UNG. But I would not take a long position quite yet, but we should look at it every week. Okay, thanks, Jim. All right, excellent. All right, what else we got to take a look at here? Anybody else? How about USO? Let's take a look at the ETF for oil. This is crude oil. And crude oil, we're bullish on targets around 100 to 110, right around in there. We've kind of gone in a little bit of a sideways motion, pulling back. If we look on the weekly chart, the bottom is still holding, which we anticipated as the bottom down here. So we're kind of in a we're long in a wait and see mode. So if you were going to think about going long on this, I wouldn't do it right now. Let's wait until this 60-minute chart is more bullish and even the daily chart is more bullish. If you're long like we are, your stop is probably not here. It's probably more up under here. So let me just move that. And that's kind of where we have this thing at rest right now. So we're kind of in a bullish run, we think, on Elliott Wave 5. But at this particular point, we're in a little bit of a pullback profit-taking area inside that wave. So that's kind of where we're at with that one. All right, let's see what we got here. Stu, all right, HPQ. All right, well, Hewlett Packard here. When should I start taking profits? All right, so interesting. All right, so we got a red PTF here, a green one here. All right, so where did you get in? Is the first question. Because you could have taken profits on part of your position here while holding on the rest. But it would all depend on where you got in. So let me know where you got in. And let's see if it would be a good idea to lock in a little bit of that profit. All right, so you got in at 29. All right, yeah, I would say, Stuart, we've got a red PTF over here, and we've got a correction. Green PTF here, green here. You've got a high likelihood of making, getting above 39, probably into the 40s again. But you're going to have to suffer through the pullback. And here's what I would do. I would put my stop right here, okay? And I guess I would put it there for half a position. And the reason for that is as long as this stays green and this stays green, then we should get a rebound. And if by chance we take that out, and you might not, you might just get a turnaround, something like that. But if you get taken out there, all right, then you might want to consider, all right, keeping the rest in and letting the correction finish. And a more accurate area of where we may go down to is that range right there. So it's very possible you could go under that. You could put your stop at 32 if you wanted to. Depends how much profit you want to lock in since you got in at 29. All right, but you're definitely going to have a correction. You're having it now, but after the correction, you should see more highs. So it all depends on how much profit, if you need to lock any in or you want to let it ride. And that's going to be a decision you need to make. But more highs are coming, but the correction's not over, I guess is the way to word that. I just think if you put your stop under here, all right, that would be a place that kind of makes sense. All right. And as Gene says, give us a like. All right. Anybody else? All right. Well, I guess that's it for today then. All right. Listen, I want to thank everybody for coming. Great session today. Whoops, Jim's got one more here. Let's take a look at that. All right. SCHO. Let's see what we got cooking there. Okay, you've got a large position on that. If I may ask, where did you get in, Jim? Enlarge. Because that's going to depend on what I recommend. 47. All right, so you're up a point and a quarter. So you're not up that much. Again, if the position is too large and you're worrying about it, go ahead and take some off the table and get it down to an amount that you can sleep at night with, so to speak. All right. Otherwise, looks like I've seen no more green PTFs, so they're gone. We had possibly, okay, good situation here in that when we had a pullback here. Let's see. This bottom held. We had our big pullback, so I'm liking that. Okay, that's what I kind of wait for. Now, the other thing is here, we've got a small pyramid here, and that's a minor. All right, but I would like to see this breach this top here as well. Okay, what could happen here, Jim, is you could have a situation where you have a bottoming formation where it goes back and forth inside that channel for quite some time. Or it could immediately break out, which would be ideal, obviously, right? So the question is that if it goes in and out of this channel, there's very possibility we could go back to the 47-ish mark. But again, it looks like you got in at 47-ish. Okay, it would have to be above 47, so it would have to be above this low here. So it's very possible you could bounce around, and if it goes below there, you got to get out. Okay, so maybe keep your stop there, and let's see what happens with it. Okay, I would say don't panic out of it yet, but you could see a little volatility in here. But you do have an ideal situation where if you think you're in too much, too large, you could back that off because you have a profit. You could back that off a little bit and then add it back on when you break the upper channel on the weekly chart. Okay. So you can think about how you want to do that. Doesn't matter if it's a bond fund or not to me, because if you're trading it, then you treat it just like it would be if it was an equity fund or any fund. But if you're doing it for a portfolio investment, then you don't worry about it at all. But, remember, bonds should do well if the market sells off. All right. So we do think that's going to happen sometime late in the year. So you may be stuck in this channel until that happens. That's the thing, which is okay, as long as you're okay with that. Just a quick update, while I think the market is going to be good, probably till election, I do think towards the end of the year, we're going to see a major sell-off in the market. And at that particular point, should go into a bear market. But for right now, enjoy the trend up, because the bear market will only start when the market starts breaking those support levels I showed you on that chart at the beginning. So you just kind of want to stay acclimated in the direction of the overall indexes, and the indexes are looking good right now. All right. I don't see anything else coming in. So, all right. So let me just go over the one we liked today. The best was PFE. Okay. So let's put that one back up real quick. And so this is coming off a bottom. Our first target is 36.60 to 43. But if this is a real significant bottom, we could blow right through that fib retracement zone. So I would not necessarily get out if it just hits that zone. But you have a 2-to-1 risk to reward. So getting to that zone would still yield a decent profit. And then we'll take a look at it again once we get there to see where our stop should be based on the pyramids and what kind of momentum has come into the market to possibly even drive it higher. So we'll take a look at it when we get to that point. On the watch list, we've got Bitcoin. Let me go back real quick to the Bitcoin market here. And on Bitcoin here, we think now it looks to me like it is in an Elliott Wave 5 and should hit our target zone by the end of the year at around 86 or 87,000 to 107. However, all right, it needs to go a little bit higher above here for me to put it as a buy for everybody. Because right now you have a situation where if it turns south soon before breaching that red line, then technically it could go down and make even one more low. All right. So we need to have a way in which we can justify higher lows and higher highs, and then draw the trend line in appropriately. So for right now, if it breaks that high, then you can draw an uptrend in place there. Okay. So that's what I'm waiting for. And it's darn close. Okay. So it's looking pretty good. We also have a green PTF in the 60, which shows it's going up short term and long term. I'm pretty confident we'll get up to that target. But the answer of timing, it depends on when this correction is over. And I believe it's over. So I think it's looking pretty good. All right. That's it for today, guys. Have a good one. All right. Thank you for being here. And we'll see you next week. And I'll put up a, let's put up for fun, let's put up some of the day trading markets here and see what's cooking. These are very short time frames. I got the 15-second on the far left, the 1 minute in the center, 5 minute on the right. And we'll put up a NASDAQ and see how that's doing. Okay, so we'll put that up there, kind of in a channel right now. But I'll leave it up there for a few minutes before we close the room so you can watch the intraday activity. All right, have a good one. Always use risk control. See you next week.